What is going on, guys? This is the Chapel Trader, and in this video I'm going to be going over a trade that I took this past Thursday. I did win this trade, and we're going to see, what my confluences were, how much I won, and what was my thought process for taking this trade. So first and foremost, I typically, whenever I start New York session, I like to look at the hourly time frame, just to see kind of where price is, what the highs are, what the lows are, and so that we can kind of see the general direction and volume of the market. So first thing that I look at is the hourly time frame, and on this day I see some taken highs right here, and I do see some lows right here that price potentially could have taken, which at the time of this recording are actively being taken right now, but during my taking of this trade, these lows were not yet taken as yet. So that was kind of the first thing that I saw, was the fact that we were kind of seeing some downwards volume or momentum. Now, the second thing is that I was noticing that a lot of these gaps were getting inversed. So I'm going to highlight that right now. We see this bullish gap got inversed. That was one of my first major confluence. So I'm like, okay, this big bullish gap got inversed. And then what really gave me the confidence to consider a trade was the fact that the second gap got inversed. And the reason why this was so important is because when this gap gets inversed, there is basically nothing else defending price from getting down to these untaken lows and this level here. So I saw this gap get inversed, and then I saw this gap get inversed, and I'm like, okay, so we are clearly running through these bullish fair value gaps. So now we can hop down to the lower time frame and spy out a potential entry. So you guys know by now that I normally go down to the 5-minute time frame in order to determine possible entries. So that's what we have here. I actually did see a retrace into this gap, this inverse gap, pardon me, but I was not about to enter off of that. Normally what I do is I wait and see if there is a gap that forms on the 1-minute time frame, if the selling pressure is strong enough, or if the buying pressure is strong enough, if we are looking to take the buy side liquidity. So what I did is I just wanted to see if any of these gaps would get retraced into, this inverse gap would get retraced into, and that is actually what happened. So I could have taken an entry out here, up here I mean, but what actually ended up occurring is I dropped down to the 1 minute and decided to scalp the lows, which you guys will see momentarily. Let's see, yeah. So if we pull up to right here, I did see a 1 minute gap form, and essentially what I did is that I waited for a tap back into this fair value gap. And because I knew that there was no more lines of defense basically protecting price from going down to these lows, I confidently was able to short all the way down. Well, no, not all the way down there, but I was able to short a simple 1.6 RR trade, and I was able to win this scalp trade. So this trade ended up winning me about $605. Let me ensure that math is correct. That's, let's see, calculator. We have 121 multiplied by 5. Yeah, so that's $605 that I won on this trade. And yeah, it's a very simple textbook trade. There was a lot of places, if you were trading on Thursday, that you could have entered on this position, or various other positions, but this was the trade that I took and I won. And one thing I want to note is that normally I am paying attention to accumulation, manipulation, and distribution. So I see that occurred here. I see that we have some manipulation here. No, sorry, we have some accumulation here, and then we manipulate down to these lows into a fair value gap, and then we massively distribute all the way up here to these highs. That's basically what's occurring. And let me clean this up a little bit by removing those. So we had this big distribution move, but then I noticed we began consolidating or accumulating. And you may be asking, well, how did you know that this wasn't going to be a manipulation swing? And the reason why I knew that is because these gaps were getting massively inversed. When manipulation occurs, you typically don't see gaps getting inversed, especially gaps of this size. Like, let's say, for example, we measure how big this gap is. Yeah, that is a 450 point gap. So if that's getting inversed, you know that we have some serious selling pressure. And then likewise, if we combine that with the fact that this is a 226 point gap that got inversed, we are pretty confident to, predict that price is going to reach all the way down to these lows right here. So that is how I knew it was not a manipulation swing, and it was indeed, in fact, a redistribution swing, pardon me. So yeah, that is kind of my analysis on this trade, why I took the trade, what I saw, kind of my thought process. And this is definitely like notes and studying and like in academia for me as well, because it reminds me to, stick to my trading rules, identify different market cycles, and identify which phase of the market cycle that we're in. And if I'm just able to eliminate the bad trades and focus on taking the good trades, my win rate will be even higher. And I'll be able to make more money, pass all the, consistency requirements that these prop firms have, and, etc. So this is the trade that I took this past Thursday. If you guys took the same trade or took a trade on this day and won or lost, let me know in the comments. And yeah, that's really it. And I will see you guys in the next one. Peace.